We are going to go ahead with our market report. This week's market report, you can pretty much call it a year end because there's another 10 days left in December. That's pretty much the end of 2023. But we're going to go over some monthly numbers anyways and show you the difference between these monthly numbers and annual numbers. So if you look at the columns as we go down, we've got total sales for this month as compared to 2021, they're down 35%. So that's a direct result of the increase in the interest rates over the last few months. New listings, they're down almost 18%. That's another result of that. People don't want to put their house on the market because if they sell them, they've got nowhere to go.
Exactly.
There's nothing to buy. Active listings are down. This December compared to last December, almost 16%. Let me just move this thing.
And just one thing on everybody out there on the active listings, Creb only posts, they don't post they include the pending in their active listings. So everybody has to understand out of that 2,775, I know it's roughly about 530 of those properties are actually pending. So they're under contract, which means they're not actually on the market. If they do come back on the market, you can go after them. And out of that remaining, say 2,200 listings there, half of those are condos. So if you're looking for a house, you actually only have roughly 1,100 houses in the whole city to choose from right now. And then if you're buying the investment property, and we always talk about the sweet spot is where the rents can actually cover all of your costs when you own a rental property. When you're looking at that sweet spot, I know Tim was looking the other day, it was under 200 properties citywide.
And out of those 200, the amount that reached the criteria that we put on those houses so that we can get our clients to buy them, it's probably about 10 to 15.
Yeah, I think it was 13.
Yeah.
13. So we have 13 houses to choose from our strict criteria. And I mean, we put a system in place. Our system is 100% guaranteed for our investor that it's going to succeed. I mean, no other realtor is doing this. And if our clients aren't happy, guess what? We're buying the properties with them or off them. So it's actually fantastic. But getting back to that, so everybody understands, we have 13 possibilities for our clients out there right now. And out of those 13, Tim, we looked at them all. We probably wouldn't even buy all of them.
Yeah, most of them are overpriced. The numbers won't work. The rest of the houses criteria fits, but if it's too high priced, then it puts you out of the cash flow business, then it's not for us. Looking at the last three rows here, median price up 1.82%, average price up 1.21%. So what we're seeing is the market is really, really flattening. The trend from in November, the average price was pretty much flat, down 0.03%. So we're seeing a real flattening of the prices. You're not seeing them go up and you're not seeing them go down. It's probably about where Calgary was a year ago. It's just a natural price level for where we are and the economic conditions we're in. But as we go through this seminar, you're going to see that things are going to change next year.
Yeah, and Tim, we're already getting calls for people looking at interest rates, and they've got their terms coming up, and they've maybe bought a home or a rental property that's too expensive for them, and they're already calling us saying what the properties are worth. So if that's happening, we know people are getting ready to sell. So there will be properties coming on the market. It's just how is that going to turn over?
So moving on to the next slide, this is the annual market report. So it's year to date for the Creb stats. And you can see the numbers here on the right-hand side. They're a lot better. They look a lot healthier because it includes the first 6 months of the year where the interest rates were extremely low and there was a lot more properties on the market. So total sales, you can pretty much say this is for the year. Total sales, almost 8% over 2022. The next one down, new listings, only up 3.38%. Now that was mostly at the beginning of the year when there were a lot more listings. Now we're in negative numbers because most of those properties have sold. Median price 6.74 over last year. Average price, there it is, 4.82%. Azad and I were actually predicting somewhere around 7-8% because the first 6 months of the year was just crazy. We went up 10, 12, 15%. over 2022. And then as the interest rate effect came in, it started to lower that average price, and it's going to settle out around 4.8%.
Yeah, and the Feds wanted to call the market, and they definitely did that.
Yeah.
Our market here in Calgary is healthy. We know in Toronto and Vancouver, which we're going to get into in our presentation anyway. And we've always said, Tim and I, for the last 3 years, 4 years, you can go back as many webinars, that our average here in Calgary should be around 650,000. I mean, how many years is it going to take to get there? We're not 100% sure, but that is a huge factor that we're way below the national average, which we'll get into.
Yeah, and just looking at that 4.82%, we base all of our analysis on 3.5%. 3.5% is Calgary's 75-year average growth rate. So that's whenever we do analysis, we base it on that. So even at 4.82%, people might say, well, that's a small increase, but it's way above Calgary's average. So whoever has owned property throughout the year, they've made a lot of equity.
Yeah, it's pretty cool. And our job is to invest in areas that go up more than the average. So you have to remember that even in down markets over the last 5-7 years, Tim and I have been, when the market was in a negative, we've been investing in communities that were going up 13%. And that's what investment focused realtors do for their clients.
Yeah, and we'll look at the last row on the graph here, days on market. If you look back to 2020, the average house was on the market for 55 days. 2021, it was 40 days. And then 2022, we're down to 30 days on the market. So what that's telling us is we don't have enough inventory, and the houses that are on the market are selling quite quickly. That 30 days on the market, that's an average. So if you have a really, really well-priced home or a nice home on the market, it's going to sell way below 1 month.
Yep. So that is our market update. If you did miss our investment tip of the week, I did put a link in the chat for our free TV. There must be over 40 investment tips on there that can save you money or make you plenty of money. And you just simply hit that link and you're hooked up to our YouTube channel.
So what we're going to do is we're going to jump over to Danielle DeMarco's mortgage market update. As we mentioned before, Danielle is our go-to mortgage specialist. She not only helps you get a mortgage on your property, she helps you develop a real estate investment plan so that you can buy multiple properties over time and not just have that one single rental property. So if you want to come on, Danielle.
Yeah, sorry about that, guys. I'm obviously doing the seminar from home and have my dog around, so apologies. Okay, so today I wanted to really talk about a couple things. The first critical one is refinancing. So for those of you who don't know what that means, that's for anybody who owns a home already, who has equity, who we may want to pull that equity out and use for a down payment to purchase additional properties. The other thing we can do, and Tim and Azad, you guys touched on this already, is those people that are coming up for renewal here in 2023, who are going from maybe 1.5%, 2.5% up to that 5% range, you might be panicking a little bit about what is your cash flow going to look like? Well, if you bought 5 years ago, you're going to have that equity built up so that we can refinance. And part of that is that we can extend your amortization back out to 30 years. That's going to keep your payment lower and help keep that positive cash flow going and keep your payment as close to where you're paying now as possible. So it's a fantastic strategy that we can utilize heading into 2023 and throughout 2023. And then same thing with refinancing, you know, Tim and Azad touched on it again as well. 2023, you're going to have to be ready to jump on properties. They're not going to stay on the market for long. There's not enough supply to warrant sitting days on market, longer days on market. And if you want to be able to get into the market before that feeding frenzy happens that they mentioned, then we really need to be ready. And part of being ready is, again, that critical word of refinance. If we can refinance now in December, heading into January of the new year, we're going to get you ready, have that down payment sitting there, have redone the mortgage on your current home, extended that amortization out, kept those payments lower, which also helps you qualify to purchase for a new home. So all of these things are going to come together to get you ready and prepared to be able to jump on a property when a property does become available. You're going to have to, unfortunately, act quickly and be ready. You know, Tim and Azad have some phenomenal advice when it comes to what type of properties you should be purchasing. So if you're going out there, you're looking and they say, hey, this is a great one, you do need to be ready. So getting your ducks in a row now over the Christmas into January, it's going to be critical for you to be able to move on properties in the new year. And then second thing I wanted to chat about a little bit is interest rates. So the age-old question, where are we going to see rates go? So while we did see a variable rates go up, so that's that prime lending rate that's gone up so much this last year, we are probably going to see one more increase to that prime lending rate in 2023. We're hoping just another quarter point, but right now we're sitting at 6.45 for that prime rate. Add another quarter point to that, you're at around 6.7. So that rate is starting to creep up. But the funny thing is, and what the media doesn't touch on, is that fixed rates have actually come down. So we saw a bit of a reverse here. For a while there, variable was lower than fixed, and variable was the way to go, and we could spend more if we qualified on a variable. And now we've seen that change, and that fixed rate is actually over 0.5% lower than it was even just 3 weeks ago. We just keep seeing rate drop coming through our emails right now. So for anybody that's been pre-approved, you might want to get pre-approved again, because with interest rates coming down, that means your stress test qualifying rate also comes down, which means that you can technically spend more. And then same thing when it comes to refinancing, with those fixed rates having come down and extending that amortization out, we can ideally keep your payment as close to what you're paying now as possible, which helps us qualify for that property in 2023 and also helps you cash flow. So there's a lot to think about, but for 2023, predictions are going to be a little bit of an increase on the variable side of things. Fixed rates should remain relatively stable. And then heading into 2024 is when we're hoping to see another lowering of those interest rates. But don't get too excited. I'm not talking that 1%, 2%, 3% range. Probably low to mid 4% is where we're going to end up in the high ratio. So less than 20% down payment mortgages. And then probably high 4s for, conventional 20% down, maybe low 5s. So we're going to see still a bit of a lowering from where we're at now, but not a mass lowering, not a huge drop. So like I said, right now, always the end of, December is always time to get ready for the new year, but it couldn't be more critical than in 2022 to get yourself ready so that when those properties do pop up, you are ready to purchase. So that is my update for today.
Awesome. Great. Thank you so much. Happy holidays.